We're live now, by the way, Quinn.
Hello, good morning, Lakhi. Happy Friday.
Good morning, Kaina. How are you doing?
I'm good. How are you? How's the week been? Is it a Friday or a Friday?
Today is a Friday. It's nice and rainy outside. I've
Nice
managed.
and rainy. That's fresh. Nice and rainy. They don't usually go together.
I was playing hockey in the rain yesterday for about an hour and a half. So my legs are completely seized up. So it's nice to sit down and just relax and talk.
I'm glad you're well rested. And so today, let's start off. We are missing our Visor report, Salim, but he's a bit under the weather. So it's just both of us today.
Yeah, I think his aeroplane is aircraft. I think because it's quite rainy, he couldn't really get the helicopter to be coming to the office today. So I think he's sort of stuck somewhere.
Okay. Yeah, Salim, just in case you're watching this, we miss you. And so yeah, so just going by the OG style. So what's today's quote of the day? Today's quote of the day is a champion is just scared of losing, but the rest are just scared of winning. What are your thoughts, Lucky Singh? Do you agree?
Um, I'm not sure that's quite true. Um, because scared is a quite a negative word, and I think a lot of people they have a growth mindset, not a scarcity mindset. If they're champions, I would say. So the way I'd frame it is, if you've got a growth mindset, then that's a champ. That's the probably the type of thinking a champion needs to have. So, for example, if you are always thinking you're going to be losing money, or there's a scarcity in your thinking about money, then what's going to happen is you're going to start losing money. It's become scarce because your thinking is like that. So 99%,
Manifestation. Basically, you're manifesting what you're fearing.
yeah, 99% of what happens around you is based upon your own subconscious programs, and also, how people around you maybe also influencing you. So if you're already in a mindset to think you're going to be losing money, as soon as the money comes, it's going to go. It will just go because of your mindset. So I'm not sure if I agree with that statement. What's your thoughts? Because it depends which way you read it, really, don't you?
I think it's a very subjective question because some people might be risk averse, and sometimes it's okay to be risk averse and not be too risk taking. Because at the end of the day, if you end up losing money when you thought that you're so positive and so confident, so like, just I'm gonna make money and be mindless and not even sometimes calculated moves fail, right? So I think that it's okay to be risk averse, but at the same time not too averse. I think you have to think through it. I Scared is a negative word, yes. But again, my favorite quote is a winner is just a loser who tried one more time. So
Yeah, I mean, depends really. It all comes down to the play of words. But I think the quote of the day is there to make you think. It's a quote. Um, so why don't we, between the two of us, come up with a better quote? What do you think is a better quote? But I did like the one that you just used. But let's try and keep it in the positive.
yeah, so that's a winner. That's my favorite quote. It's just you keep trying, you keep failing, but at some point you will succeed, and that's when there are 1,000 failures like backed by one winner and one's trajectory. So I think, yeah, a winner is a loser who just tried one more time.
I think my favorite is adversity is the mother of all invention.
Sorry?
Adversity is the mother of all invention.
Inventions. Yeah, yeah.
So I think I'm not quite sure of the term, but needs must. If you've got needs, then you have to think outside the box, and things will turn up. So if you haven't got the need or the hunger, then you'll just get whatever is there in front of you, because that's your lot, because you're not really thinking ahead or thinking about what you can get. By the way, you've got quite a few few admirers by the looks of things on Facebook. Have you seen?
I can't access the comments. Hi to everybody.
Well, there's somebody saying good morning and somebody saying you're looking gorgeous, Koena.
Oh, thank you. Thank you
Maybe,
so much.
maybe VJ Sal is actually an admirer after all.
All right. So yeah, but one thing that I want to say, Lucky, want to know on your perspective, our generation, like the one I classify myself as a millennial, but I'm pretty much on the cusp of it. Are very is very entrepreneurial. It's very cool to have your own startup, to do your own thing. Nobody wants 9 to 5 job is lackluster particularly. Nobody wants to be in a 9 to 5 job anymore. Everybody just wants to, do their own thing. Some of them succeed, some of them fail. And but do you think that this current generation is far more gutsy, far more, are like go-getters as compared to its previous generations?
Um, I don't think so, to be honest. I think you've got a bit of an issue, which is that the whole gadget thing, people are on Xbox all day. Children, well, I can only tell you based upon my own kids because my daughter's 16 now, son's 19. But they are very, they're not, the social skills are slightly inept. They're not quite formed. So, at a business level, are they more gutsy? Are they more willing to go out there? Um, well, the technology is certainly there to probably give them the advantage. But I think a lot of the teenagers and the youngsters of today, anyway, my feeling is that they've been given too much on a plate. So, easy
Felt
come.
like a personal attack, but felt like a
No,
personal attack because I think my father would agree with the same that, we had it easy. And that's what I think that's what every parent feels like they had it easy.
talking generally about anybody that's actually millennial because they they have actually had it easy compared to maybe if you keep on looking back at the generations. I was watching a couple of films from the 20s a couple of days ago. Some of them are living, it's very much of a farming culture. So it depends really what you mean by hardship, because hardship is normal, I suppose, in the 20s and 30s, the 1920s and 30s. I'm talking about. Whereas now, what I'm saying, I'm comparing it to that. I'm not comparing you to anybody. I'm just comparing this generation. I'm just saying we've got it all. So the question is, when we've got so much, you've got a very good nanny state. You've got a lot of gadgets, a lot of technology. You've got parents that are probably willing to sort of help you to actually get you on the housing ladder. So I'm just saying, in terms of the vibe for people going out to get aggressive in business and get their feet on the table. I'm not sure how strong the vibe is. You're probably better placed to actually know because you know a lot of people. But I think your situation is a bit different. You're from you yourself are quite entrepreneurial, so you're uh, probably not the norm necessarily. But what would you say? You're probably better to ask the question because you're from that generation.
I definitely think that we have, like our generation or my friends or my peers, we do have the drive to do something. But at the same time, I think we lack the like, on the course, on the you learn a lot on the job. We have ideas, of course, but when it comes to execution, I have a feeling that our parents or like the older generations had better idea how to execute or start. Like most of the businesses that are generational, for example, they're decaying. They're not, maybe it's because technology, vast, globalization, blame it on anything. And I think that even if if you when you were growing up, if you had YouTube, if you had Google, then you would be using it too. So it's not something that we take blame on because we are just playing by the rules, playing along, and how the generation is. Everything is it's just as you say, gadgets are taking over. But I think that like we do have the drive. We are doing really good, like in terms of being entrepreneurial, but at the same time, when it comes to execution, we do have a knowledge gap, or we do not, maybe we are like go-getters, but we do, I think, uh, we have, we don't know much about how to go ahead because we know what to do. But I think personally for me as well, to execute something, to know the ins and outs, to have that patience with such short attention span where you just scroll and you know what's happening around the world. You cannot know everything in detail, and when knowledge is very important when you're getting into something entrepreneurial, you have to know right from the grassroots level to the top. If so, I think that execution part, I think the older generations are much better than the current generation, but ideas and how to think out of the box, this generation is killing it.
Okay, so I think in some ways you're what I would say is that you're probably the go-getters are probably got different types of personalities. Certain people that have more of a drive, like yourself, who are quite out there. Want to get the best education, want to be in the top places, want to go to the top places. If you've got that sort of mindset, then I think that's half the battle. Um, then I think initially also if you're used to certain type of lifestyle, you also can't afford to be doing nothing. If you are, then you're not really going to be able to just keep the basic standards. So you have to be sort of driven to be able to just hit the basics, regardless of becoming the next Elon Musk or the next Zuckerberg. Yeah. So yeah, that's what I would say anyway.
That's great. So yeah, so that conversation was quite escalated quite quickly. So today we are talking about property again because that's what we do. We're the same industry, Lakhi Singh, and when Lakhi Singh's there, the property fixer, we have to talk about property market. So Lakhi, do you think the property bubble is a thing and it's gonna, like, the property market is about to collapse in the UK? Just putting it out there. Very strong question.
Okay. Sure. If you follow the press, well, I think everybody's actually forced to follow the press at the moment because we've got a couple of home truths based upon our discussion last week with Linda Singh and with Vijay Sal. Vijay Sal hit the nail on the head. He actually said something like, "Before you know it, we're going to be going back to almost caveman times, actually, by going back to the land and going to have to get your own carrots or something." And I think obviously he was making a joke of it, but I think it was also being serious.
Yeah.
What he meant by it was that we haven't seen anything yet. In the next couple of months, you're going to see the market literally collapsing. Is which he was what he was indicating, and he was actually just using that as an analogy. So if you look at the indicators, I think I sent you also a news article. I'm not sure whether you had a chance to read it or not.
Yes.
In fact, I just read to the key points, so maybe if we've got it there, we can probably just sort of discuss that. So the key indicators are: number one, stamp duty; number two is furlough. So stamp duty sort of coming to an end. The furlough came to an end yesterday, um, which affects 11 million people in this country, apparently. We've got the fuel crisis, which is indirectly linked to COVID-19 and Brexit, but there's lots of underlying issues which are not being discussed. And then you also got the universal credit thing going on where they're reducing that. Um, then I think the targets for the Bank of England uh, are meant to be a lot lower, but at the moment, the inflation target they're not really hitting. It's actually at 4% apparently. Well, I'm not sure if how I'm actually managed to keeping up all the news because I haven't actually watched the news at all. But somehow, just reading the paper on the way home, and just listening to what's going on generally, that those are the sort of key indicators. So I would say probably by March, we're going to be seeing some sort of interest rate hike and a potential collapse in the housing market. And it's definitely an artificial bubble that's been created up by all these bounce backs and a lot of artificial money being pumped in. And I don't know whether you heard yesterday, they also announced $500 million to help the vulnerable people in the UK. So they're throwing money at the problem, uh, which I think to a degree does work, it does help people. Uh, but ultimately, you can't really control the inevitable, which is that the only way is up when it comes to interest rates. The only way is down when it comes to property prices. So the only positive thing happening for the property market at the moment in a big way is that you've got very cheap lending. And there's a lot of big money that's coming into the UK market and coming in cheap. You can get very cheap lending and at very low rates. So so I think that's my take. What's your what's your sort of understanding, or because I think obviously you've studied. Is that you studied business? Is that right, Kona?
Businesses. Sorry, I couldn't get your question.
I said you studied business. Is that right?
Yes, yes. I studied finance and investment back in uni. But in terms of property market, I would say that the demand is pretty strong because every day, in terms, I work in lettings. So I think the demand is really strong in terms of sale as well. And people, most of the queries that I receive in the day, they want quick sale. They want sale up because we are up, as you know, the article that you sent me in the morning that say that the property prices are up by 13% as compared to the pre-pandemic era, and the demand is still quite resilient. September was the last month for stamp duty, yes, and despite that, I didn't see a change. Like there has been you know, the growth has been a bit slumpy, but the demand is quite strong in terms of it. So I don't know if you are talking about a complete collapse or a gradual cooling off. What's your take? Do you think it's going to be like a 2007, 2008 housing crisis, or it's going to be, you know, in bit by bit and then cool off? Like it won't have a lot of casualties when it happens.
I'll be honest. I don't. I think I don't really want to be putting sugarcoating on the topic. So I would say, yeah, I think it's going to be quite a sharp collapse.
That's worrying, and that's a big fire alarm that raised by Lakhi Singh. He said it's going to be a 2007, 2008 recreation, but the government has been like pumping money ever since the pandemic. Like all the schemes they have been the thing that you mentioned about interest rate hike, that's inevitable at a point. And definitely like we, the common man, the incidence is gonna like affect us. So I think, yeah, if we do not take a conservative approach, it's not gonna be as a cool down approach. It's gonna be, you know, explosive, as you just claimed. But everybody talks about the explosion, everybody talks about the property bubble, but nobody talks about the aftermath. What do you think will happen after?
Okay, so things I've actually seen the last couple of crashes or changes in the market, and I've actually been one of the people that were quite badly affected. So I've sort of seen the full cycle of what happens. Um, so my take is that there'll be a collapse. Then for about 6 months, then there'll be a lot of buying opportunities for people with deep pockets. Um, then I would say that after about 6 months, the market will start picking up in certain areas. But I think the collapse is probably going to be bigger outside London because I don't think London prices have actually gone up that much because London is quite congested and because of COVID-19, the demand to buy in very um, tight spaces in the city uh, has just been very, I would say, minimal. Whereas the outskirts, suburbs, sort of Greater London, and further afield, seaside resorts, etc., people have been buying further afield outside London because they've been worried about this COVID-19 pandemic. Uh, getting elongated on and on and on. So they'd rather be on the safe side, especially if they've got small families or vulnerable adults in their households. So I would say that we're in a position now where you've got a lot of quirkiness in the way things will happen. So the London market will also collapse, but not in quite in the same way. I've seen it in previous years because it's actually not gone up quite in the same way as in other markets outside London. But certainly, a lot of the cities outside of London, the prices will definitely slump, in my opinion, unless there's some sort of miracle and you get the government all of a sudden finding money from somewhere. So that they want to pump in further, find another reason to be throwing money in while they find a way out somehow. But if you look at the fuel crisis, look at inflation, you look at all that's been done in pumping money into the economy and furlough, all the indicators are actually pointing in that direction. And there's not many people that I know, from family offices to individual holding assets, that wouldn't agree with me. They may say something different on the face of it to try and spruce up their business, because nobody wants to say my property's not going to be worth that much. So if they've got property and trying to sell, they're obviously going to be very hypey, be like, the property is amazing and property prices are going to go up, because they can't afford to be down playing their portfolio. But I think the indicators are the ones that I'm using. So I'm not even trying to
You're
come up
just
with.
setting it out, yeah, just setting the record straight. I think we're gonna, like, 6 months down the line, if and as you predicted, if the crash happens, you're gonna go viral again, like he's saying that he's like, yeah, he predicted the right things, he didn't like sugarcoat it. So that's what he's like, right? I would say that yeah, one thing that I would like to discuss is the fuel shortage, because I have been like in the traffic since forever because of fuel crisis. And for the viewers who are international, they don't really know what's going on in the UK, and they might not have the knowledge of it about the fuel crisis. Lucky, do you want to discuss about the fuel crisis, about what initiated it, and what, like, how long do you think it's going to persist? Because the fuel crisis is pretty much imminent at present while we are talking.
Um, Before we go into the question, just to let you know, I've got a lot of viewers coming in. But what I'm going to do is I'm just going to put their comments are actually going up, so you can actually read them now as well.
Good morning, Sonia. That's the first comment I see.
So,
howdy.
And then I think we've got others as well.
John Smith, both are looking perfect. Thanks, John. Really kind of you. Facebook user, looking gorgeous. Koyana, who's that? Hello, hi, thank you.
This must be one of your secret admirers, I think, Koyana.
Facebook user. Good morning, John. I hope you're enjoying your Friday.
Okay, I think those are the key sort of comments that have come up. There's quite a few more. I think we'll be here looking at the comments all day, actually, if we started doing that.
Yeah, it's fun to engage with people. It's just us now. We don't have a guest today. VJ Sal has bailed on us. It's okay. We'll see him. We'll catch hold of him soon. So yeah, getting back to my question about the fuel crisis, what exactly initiated? Just a brief roundabout.
To be honest, I haven't even had a chance to look into the in depth in terms of why it's all happened. So I think you probably might have actually followed the press a bit better than I have. But from what I've understood, I think it's just the with the COVID-19 has had an impact on the number of drivers, and then also you got there's basically difficulty in terms of getting the fuel and the drivers to the petrol stations, and that difficulty is the one that's actually caused a bottleneck in the supply chain. And I think I've also heard that nearly even Boohoo, I think I was just reading yesterday, which is a very, very popular global international retailer. Um, their share price is actually slumped, and you wouldn't even guess why. It's because there's a bottleneck in their supply chain because of COVID-19 and because of staff shortages. And because of that, they're not going to be able to scale up and meet their targets as easily because their whole supply chain is affected. So the weirdest thing about the whole of this is that there's companies that have a huge demand for their product and service because they are mainstream, like Boohoo, for example. But it's not the customer demand that's the problem. It's the supply that's becoming a problem, which is kind of strange, really, if you think about it. I never really. It's quite unprecedented, isn't it?
I think that one of the another pressing questions that has been about drivers, about temporary visas being handed out to drivers, and I read one of the Polish drivers was just went out off on one, and he's like, you know what, we don't think that we're gonna help and bail out the British now that they're in, just to sort their Christmas out. So we won't be coming into the country for 3 months, just drive around, and then we'll be thrown out and put back into the international status. So I think there's gonna be a dearth of drivers for a long time because they're on their own level of strikes and they do not want to come back on temporary visas, work here because they know that the chances of retention in the country is pretty grim. So there is a huge shortage of drivers as well, like he's saying. You're aware of that.
Yeah, I mean, there's a lot of how do you say mistakes that have been made by the government, uh, especially in relation to Brexit. And I think a lot of people didn't realize the implications of really what Brexit would mean. Uh, and I think what happens is when you're in the comfort of your home, everything's working, lights working, the electric's working, gas is working. You can go out, you post and you sort of go out and vote on things which seem more ideological and seem like a nice thing. I can vote not to be in Europe anymore because this sort of thing.
England, Team England, yeah, Great Britain, Great Britain.
So it sort of seems okay. So I know quite a few people. I know quite a few people that voted in. How do you say, to leave? I know quite a few people that voted to remain. But there's a feeling that anybody that voted to actually leave is now talking to people that wanted to. Anybody that wanted to remain, all the remain people, most people are that in the leave category and saying, "I wish I did actually remain." So my guess is that at least 50% of the people that actually voted to actually leave Europe are probably now thinking, well, I brought this on myself, didn't I? So what were you expecting? You understand? So you were sitting in a queue, but
Yeah.
now what you did at the time. You understand? So a lot of people are probably now everything's filtering through. They're seeing the repercussions of their own actions. So I think a lot of these things have been brought up by our own society. So I think if you made a decision, now you've got to live with it. So it's somewhat laughable at the same time. But a lot of people are thinking, okay, well,
they brought this on themselves, honestly.
But I mean, that's not the only thing. I think you could probably say the other argument is that this could have happened anyway because of COVID-19, because of logistics, because of There could have been, even though it couldn't, may not be just because of Brexit. It may just be that governments may have voted a way to actually ostracize a lot of the European community anyway, because Brexit is just one way of doing it. But there's probably other ways of actually causing controversy with your European partners. It may not have just have been that. There could have been something else. So who knows? I think I'm not going to speculate too much, but that's my take. I think a lot of it is just about strategic management, being and the way things are set up. I mean, every government has a 4-year window to prove themselves. Is 4 years long enough to be able to make a change? Is it can somebody be held accountable after 4 years if somebody else was in power before making decisions? So there's lots of moving parts which create an economy, create a situation that's actually like this, which is very, very turbulent. And so it's not easy to actually point the finger at one particular thing. It's just a number of things happening concurrently to create a perfect storm. And this is what's beginning to happen in terms of what I can see in terms of what's happening to the UK economy and which way it's going.
I think so. I think especially England from from a geopolitical angle, from a vantage point, I would say that it's a lot is happening. First, we have Sonia who says so much noise from the levers around jobs for the British workers. That's quite a snide. But thanks, Sonia, for your input. We we see you. And one thing that I would like to say is that so much is happening in England, I would say, in terms of, say, nobody was prepared for COVID. It was so unprecedented. Well, unprecedented for common men, like common people like us. But in terms of Brexit, we have COVID. And I think, I'm from India, and COVID is still like pretty, the cases are on the rise, people are dying, and the cases, like, though we have a huge vaccination drive, but our vaccines are not, recognized worldwide. So the vaccine that I have especially taken is called Covaxin. It doesn't have any recognition. So I'm technically classified as unvaccinated. So we do have questions about the potency and the efficiency of the vaccine in terms of that. And India has somewhat handled COVID because we are a country of 1.3 billion people. So, herd immunity, and we have heard about these things, and we are still fighting COVID. Things are still shut in places, some places, and opening partially. But England has handled COVID-19, I would say, by pumping money in comparison to India much better. But one thing that I would say is they have they have done huge financial pumping and stuff, but there's always gonna be a repercussion after. Like, they have sailed through COVID in terms of property market really well. But as you say, like, there has to be a slump, rather, just to put it out flat there, a crash. Now that, we have seen the boom and it was quite, sustained throughout the period, even now as well.
Right. Okay. So, I mean, I think what we should do is today's topic. I think what we should do is we need to try and give the users out there some value in terms of what Lakhi Singh, the property fixer, can do to fix the problems that may arise from a problem point of view, and what is it that Lakhi Singh and his team can do to help anybody that's actually either in 3 stages. Either they've got a lot of money, they've done well, they've got money, or so they're looking to acquire, and they're sort of looking to assess really what they want to do. They've probably been quite strategic, and they may have already taken out a lot of their money already over the last 4 or 5 years from the property business, now looking to acquire, a bit like the Rockefellers. So these are the people that are the few and far betweens, but they've got a lot of money, they've cashed up, but they're ready to actually go now, but they're looking for the right investments to grow their portfolio of investments. Okay. So that's one category. And then the other extreme is somebody who's got about um, 20, 30 properties. They bought them about 15 years ago, and they may have end of term issues now because, should they be refinancing out? Should they be selling? Uh, should they be looking at a fixed year for 5 years? Are they young enough to be able to remortgage and refinance and get better terms? So these are the sort of questions that they need to be asking. So two you got two different parameters, and you got people in the middle where they've got maybe a house and maybe a couple of properties, and they're thinking, should I be looking to sell one of my houses uh, to invest into more property, or should I be waiting for a change in the market? Or if there's a change in the market, how should I go about actually managing my affairs? So these are sort of things that are running through my head about how I can help, because being Lakhi Singh, the property and business fixer, um, every day what I do is I meet a lot of people in different circumstances. And in some ways, I suppose the type of work we do is turnarounds, but we're quite unique in the sense that we're the leading specialists in turnarounds for property portfolios. So we are not just business or insolvency or CVAs or IVAs, which is voluntary pre-insolvency type work. We do a lot of hand holding for landlords with complex portfolio situations. So I think it's important to actually bring out some of these topics and actually give maybe particular strategies for those two or three profile of people that we deal with.
You say that there's going to be a slump in the prices after the crash because that's going to be sustained. It's not going to be as high as it is now. And you say that you are like in the service of the landlords who have like a lot of nice with the landlords with portfolios in within London and the outskirts. What kind of strategies or what kind of tips would you like to give them in terms of hedging for this potential crash in the very near future?
Okay, basically we've got okay, so you've got two or three different profile of people. So I'll give you the hedging on each one. So if somebody's got a lot of money, then it's very simple. They need to go and speak to our finance team, and we should look at developing a revolving facility so they can buy and grow, set up the tax structure, and work out really how they're going to be buying assets to minimize their tax and maximize their profits. And then also talk to our real estate division to find out really what type of assets, where they want to acquire them, what their strategy is going to be again, and what sort of discounts should be looking at on purchase. What sort of discount they're looking on at purchase. Sorry, just had a call there, so I had to just take that off my phone. What sort of growth strategy should they be adopting based upon the slump being around for 6 months? Should it be buying built assets with a discount? Should it be buying land to get to maximize their returns? Which way around should it be? So my very simple take on that first profile of person is that if you have to go and buy a piece of land, build something or refurbish something and make a 30-40% net margin, which is probably pretty amazing, but the typical tends to be about 15% net margin on a project of that type of structure. But if you can buy a ready-made asset for a good discount, about 20% discount, or even a 25% discount, why wouldn't you be looking to do that? So that's going to be the more important. That could be the probably better strategy to be looking at. So that's actually point one. point to somebody who's mid-tier, who's got maybe mid-high net worth. They've got maybe 2 to 10 properties. They've got a house. They've got a good income, husband and wife both working on 50 to £100,000 a year. What should they be doing? They should be looking to consolidate, because if interest rates go up and their properties aren't on fixed rates, because you can fix your interest rate on your property for 1 to 5 years or 1 to 3 years. But if you leave it unfixed, and then you're susceptible to market changes. So inflation goes up, interest rates go up, you may be having to pay double the amount of interest to the bank. And then if you haven't got your tax affairs in order and you're all still in individual names, then you can't offset the interest against your profit. So you're going to be you'll be paying maximum tax. So I think it's just consolidating and structuring ready for the rainy day. But at the same time, I think it's a very good time now to sell a couple of assets now and actually have cash. So cash is king. So if it was me, I would take drastic action. I'd literally sell all my assets now and actually cash in and get ready to purchase. But you've got to have a strategy in mind. There's no point just cashing in if you're not clear about your strategy. And worst case scenario, if the market doesn't collapse quite in the way that you think it's going to be, you should be able to actually be able to use that money wisely to buy land or refurbish properties and still have a net margin of at least 15% as a minimum on any purchase. Okay, so that's the second tier. And then the third tier of person is somebody who's got maybe they've got 2 or 3 properties, but they're not on fixed rates, but they're more highly geared. So the gearing actually may be that they've got 2 million portfolio, house that's worth £500,000, personal house, but the gearing and all their assets is probably about 75 to 80%. So if interest rates do go up, they're likely to not be able to pay anything unless they've got a substantial income, unless they're on a couple of £100,000 a year. So that is actually so they're at the highest risk of actually going bankrupt, going to have to go through an involuntary arrangement, or having to actually go through a rethink regarding going onto fixed rates. So if anything, what they need to do is they need to do an appraisal of their assets. It may be that one particular asset they've got is unencumbered, and they may want to sell a couple of those and actually reduce their liabilities and reduce their exposure.
Mm-hmm.
They can get them on fixed rates, they should get them on fixed rates. But if they can't get them on fixed rates, it may be worth just selling those assets. And even if they can get out now, because it's the top end of the market pretty much, and still get their equity out in those assets, then they're still onto a winner. So the last type of client is the middle type of client. Well, all 3 clients is who we deal with, because the top end clients want to buy from us. The clients in a complex sort of consolidation situation, they want to actually work with us to actually restructure their finance. If they've got any arrears or missed payments or defaults or CCJs or any type of issues with debt, or they owe money to somebody, or joint ventures not worked, or HMRC's chasing them, then we actually help them to actually deal with all those type of situations. And we're specialists with LPO receivers, especially if they've got a repossession type of issue going on with their buy-to-let portfolio as a landlord. So that's pretty much what I wanted to say.
Yeah, that's really insightful. And for a moment, it's really educational for me as well. three types of clients susceptible. One thing about I was asking one point that you mentioned about the mid-tier people, the 50 to 100K household income. You asked them to like you know you, to fix the interest rate from what to 1 to 5% and not make it like that's a very smart way of hedging actually. How exactly could you elucidate more on that point, like about being susceptible to the market crashes because you will be literally hedged if you fix your interest rate. So even if it varies or floats, it's not gonna affect you in any way. So could you
Yeah.
elucidate on that point much because I don't know.
I mean, it's easier said than done, to be honest, because if you've got, just to give you an example, so if you've got, let's just say, £2 million portfolio,
Yeah.
you're geared at the debt is 1.5 million, and the value of the assets is 2 million. That means 20% loan to value. What happens is that if you're on a variable rate at the moment, if interest rates go up at the moment, you may be in profit month on month with the rent coming in and the your costs. But if the interest rates went up by 1%, and maybe you're in break even, and maybe that if interest rates went up to 2%, then your cash flow makes it you might be in negative cash flow. And a lot of people use their earned income and their employment income to deal with the shortfall in the cash flow on their portfolio. That's quite common. Now, that could be a problem because what if you lost your job? So in order to counter that, you don't want to be in a situation where you've got a problem. So you're better to pay a slightly higher fee. It may mean that your portfolio just breaks even, worst case, because on a fixed rate, you may find that the interest rate isn't as cheap for a long-term 5-year fixed rate. But the interest rates are so cheap now, on the whole, you're likely to be, it won't get back as bad as break even. But what it will do is it could get fairly bad still. So in order to counter that, because fixed rates are going to be higher, what I'm saying is you may want to sell one asset to reduce your loan to value a little bit anyway. So you've got cash in your hand to deal with a rainy day if things did change. So that's one strategy. The other strategy you could adopt, the other problem actually you could have is that when you're trying to get the fixed rate in, you might have to go and do a reevaluation of your properties. And if the bank doesn't like the rental amount or doesn't like the AST, they're being a lot more draconian in terms of the type of information they need to be able to give you a buy to let. They're expecting 6 months holding as well of rentals on account, which they want to see in your bank. So they're expecting you to be a lot more like a business, not doing things on a wing and a prayer. So if you can't really meet their criteria and you haven't got the financial backbone to be able to do that, then you're going to find you can't get onto fixed rates as well. So, uh, so I think you've got to really if you are in these type of situations or anybody you know is in that type of situation, then what we typically do is we do an appraisal of their portfolio, look at every single asset, look at the values, look at the tax, look at everything, and see what is it that they need to do to counter the risk in the market, because it's all about numbers. Everything is about numbers.
Rich insights and really educational, informational insights come from Lakhi Singh, the property fixer. And I think it's a very pressing topic as well. One thing I would like to ask you, Lakhi, if everybody starts fire sailing their properties, as you say, that you can let go of one property, if every landlord decides on that, I think do you think that would be an ideal situation because property prices are really high right now? So if everybody tries to like let go of one and in return of the cash, as you said, so do you think it's ideal?
I'm going to come on to that in a second. I've got Normie Rose, which is I think she's been on our show before. She's a
Hey,
big.
Naomi, good morning.
She's saying good morning. I think she's meant to be coming down, and I'm meant to be taking her out for lunch. I think
Oh,
because She said she's going to come down. I said, come and visit us anytime because she's in London. So it's a formal invite for lunch now, Normie, and good morning as well. So you don't get invites for lunch like this on the show, do you normally? Do you, Normie?
Yeah, Nomi. Am I invited to the lunch as well, or is it just you and Nomi? I feel left out.
I think you're both invited, yeah. So good morning.
Thank you. That's yeah. Now we're talking.
So Normie, here we go. It's going to be a fun time. So when are you down next? Let us know. Okay, so going back, just ask me that question again, because being a man, I can only.
You suggested quick sales and fire sales. Yeah, I think it's going to be a problem if every landlord in the UK and the landlords are obsessed. The British property market is so different from the market elsewhere. If everybody starts letting go of properties off their portfolio in order to hedge and apply, your strategy, do you think it's going to be an ideal situation in the market?
Um, so are we talking about from a buyer's point of view, or are you talking about the seller's point?
Buyers, I think buyers, it's not convenient because the property prices are really high right now. If landlords are cashing out and waiting for to make purchase more in the coming months, buyers should take a cue as well. Why would if everybody's somewhat foretelling the fact that there's going to be a crash? I mean, buyers are not fools. Like they do know that it's going to be a buyer's market soon as well.
Okay. To ask me more specifically the question, because
Okay,
the thing is,
ask you more specifically. I'm just asking, okay, from a seller's, from a landlord's perspective, everybody starts like, selling their properties, like even if they let go of one property of each of their portfolio, as you suggested, to get in some cash. Do you think it's going to be ideal? Like the market situations, is there going to be, what are the repercussions that's going to happen if everybody starts applying your strategy?
well, the way I'd say it is that you can never be too safe. So there's a 1% risk of you having covered the basis because you're being too optimistic. It's better holiday and cash. Like I said, like I said first, if I could sell all my assets and just have complete cash in my hand, that's better than to have, 20 assets which are actually negatively cash flowing because I won't be able to sustain them. And so the funny thing about this conversation is that 90% of the work that we tend to do is where people haven't actually followed best practice in actually managing their portfolio and putting them on fixed rates or selling enough to be able to have cash. So I'm almost technically doing myself out of a job, but that's what I want. I don't want people to be in a problem like this. I don't. I mean, we can help people not just having to deal with the problem on the other side. We can also help them to build their portfolio because we get a lot of deals as well. So I want people not to be getting into trouble. I want them to be proactive. But if they don't know how to do that, or they're finding it difficult, the problems that are there that are caused or actually are the overkill of why these problems occur are nothing to do with the asset, they're nothing to do with the money, nothing to do with the numbers. They're all developed, all based upon the profile of the person that's actually investing into property. And the most of the profile is that most people are accidental landlords. So they're not business people. They're probably got a 9 to 5 job. They've got families. Um, they've basically built up a portfolio just to try and get a little bit of cash reserve for pension, but didn't realize all the red tape, the tax, and the licensing, and um, the sort of rigmarole around managing the type of mortgage you should be getting, how certain things work. So they may not be technical, And I think it's those people that have probably saw it as an easy win to increase their pension pot, but without realizing the level of hard work it takes to sort of manage, sustain, and strategically overview what you're doing, are the ones that might have issues because they've not looked at it with enough detail or don't have the sort of business acumen to be able to deal with all these sort of problems. And I think so. What I'm saying is the psychological profile of the person, of their profile, that actually determines the success in their portfolio. So if they're somewhat overly optimistic and think that everything's going to be fine because they think they know what they're doing and they're just doing it as a part, it's the portfolio is a side thing for them. The portfolio could become a bigger problem than everything because the debt could rise substantially and could actually swallow up your whole portfolio and all your income. So I think that's the sort of warning sign that I'm giving to people.
Brilliant. I think we've got 2 minutes left, and I have got 2% charge left. So that's very inconvenient and convenient at the same time. Brilliant discussion, Lakhi Singh, and I think this was really insightful in terms of the property market in present. And there are so many landlords who are so confused about what to do, and the strategies given out by you in a tier by tier basis caters to all. So with all your property problems, I'm going to redirect you to Lakhi Singh, and with that, I'm going to take your leave, and I'm going to see you on Monday.
Okay, fantastic. Well, Cohen, thank you very much for hosting the show. And it's goodbye from Lakhi
Yeah,
Singh.
Wakanda forever. See you.
So take care and have a great Friday.
Friday, a weekend. Yeah, let's just stretch it to the weekend. See you on Monday. Bye.
Okay, bye.